When do you think this situation is going to stabilize?
Well, I think it's going to take a while. I mean, obviously, right now they're facing the biggest issues is the macro situations with many of the PC vendors having excess inventory that needs to be worked down, so they're shipping well below. And we were, and I'm sure the street was very surprised by the magnitude that they have to come down in the March quarter, as per their guidance of a midpoint of 11 billion, about 3 billion below what the street was expecting. We would look for second quarter probably to be better and things to get better sequentially. But I think Intel still has, many other issues besides just this as they try to get back on track, trying to drive those cost cuts and obviously trying to get all their products out.
And certainly some of the issues that Intel is facing, as you say, this isn't just an Intel issue. This is a market-wide issue, and some of these things are not within their control. One of those things is, of course, the broader macroeconomic situation with the PC market, and it would also affect the stock pick Texas Instruments of Scott, which we'll get to in a second. When do you, Lou, see the PC market recovering?
Yeah, sure. So I'm here at Daiwa, and Daiwa Capital Markets America actually had a group call with analysts, and I think pretty universally we're looking for the second half to really start to be a lot better. That's with the assumption that interest rates obviously moderate, that even if we have a mild recession in the first half, that we're going to get past this and that we'll start to look at demand returning both on a sort of a quarter-to-quarter basis throughout 2023, but then definitely as we get to the latter part of the second half, at least if nothing else, fourth quarter. Obviously, stocks are already starting to anticipate that, and we support that view.
Now, I've got to ask you, Lou, do you think that Intel is going to be able to execute? Because a lot gets made of the fact that, they're obviously showing contrition yet again to investors, to the shareholders, but this screams of value trap, because if they can't execute for the past 3 quarters, what gives investors any kind of confidence they're going to be able to execute over the next year when we've got this downturn that we're seeing in the markets?
I'm supportive of your comment, your view. I've been cautious on Intel now for about 3 years. And, I guess as I look out, and what I did actually write about tonight was that, they're looking at $3 billion of cost cutting this year, followed in total by 8 to 10 over the next couple of years. We assume that will create some disruption and obviously the possibility of more unforeseen issues. Now, we also think that they do have to move aggressively to both on their products and also to a foundry model. But a foundry model is very new. So, any new ramping business, especially in the semiconductor area, to the magnitude, we see risks to that in 24 and 25. So, we're still suggesting investors take a cautious approach, and we have a neutral rating.